We are doing the third learning objective, prepare a corporate income statement. So return earnings, okay? We mentioned that return earnings is the accumulation of profit less loss, right? And less declared dividend since incorporation, right? So the way to increase return earnings is through your profit, right? The way to decrease return earnings is to when you have a loss of the operation, or you issue the dividend. So when you issue dividend, your return earnings will decrease. Okay, it represents part of shareholders' claim on the total asset of a corporation. So your total asset of the corporation could be $2 million, but your return earnings may be only $400,000, right? The remaining is probably liability, right? So the shareholders portion is actually only the return earnings. Liability is the creditors, right? So you have to give back to creditor. The only thing can be claimed by the shareholder is the return earnings. As I mentioned, profit will increase return earnings, and the dividend will decrease return earnings. So the corporate income statement is similar to the proprietorship or partnership statement. Important difference is the income tax, okay? Because partnership we mentioned in last chapter, partnership is a legal entity, but it's not a tax entity. So partnership does not pay tax. Instead, partnership will allocate the income to the partners, and the partners are the persons who will pay the tax, okay? Corporations will pay tax. It's called corporate tax, okay? So the expenses is called the income tax expenses. And on the balance sheet, if you didn't pay this cost on time, there is a liability called the income tax payable. Other times you may not need to pay the corporation because throughout the year you have paid enough, more than enough. So then CRA need to return any excess money, right? Any money in excess to the amount calculated to be the payable. So in this example, the name of the corporation is Urban Tech Incorp. The title of the document is Income Statement. This is for the year ended December 31st, 2024. And you can see that this is a multiple step income statement because you can see gross profit, right? Sales, 800,000 minus cost of goods sold, 420,000. So the difference is your gross profit, 380,000. Then you have the operating expenses, 94,000. And your profit from operation is 286,000. You pay interest for 4,750. The profit from income tax, the profit before income tax is 281,250. Then the income tax expenses is 56,250. So the profit, net profit, is 225,000. So this would be a sample for a corporate income statement. Okay, do we have any questions?